Thank you guys for joining us today. I'm excited that you guys decided to be a part of attending SuperNova and the payments panel. We've got a really good panel in the lineup here for us today, and I'm excited and honored to actually just be the moderator that gets to introduce these amazing individuals and a part of what this conference is and what it's been created over the last several years. So if you did not read the notice, I'm going to give a brief bio of it, just to make sure you're in the right room and we don't have any attendees leave before we really get into the good stuff. So the thing about the payments industry, it's expansive, it's jaw-dropping, a tad bit frightening, but mostly filled with possibilities, especially when you look at payments from a global perspective. And not only that, but a mobile perspective. And then you also have disruptors that are gaining speed because of the way they've been able to maneuver within the payment space. Being very nimble has allowed them a lot of advantages, and we're excited to hear from the panelists today, which includes 2Checkout, TradeRocket, Equitable Payments, and as well we have WorldPay. So thank you guys for attending today, and we're going to jump right into it. We'll have a little Q&A at the end, so feel free to keep your questions, and we will open it up at the very end of this. We're going to have a round of series of questions that we're going to go through the panelists. Each will have 3 or 4 minutes to talk, and we'll get a couple of intros as well. So thank you. Santiago, do you mind starting?
I guess I'm the lucky one. Hello, everybody. I'm Santiago Venegas, founder and president of TradeRocket. I'm a little bit different because part of what we do is payments, but we are the supply chain finance. So we basically allow, within the B2B world, to provide capital and business processing solutions integrated into one. So that's basically what we do.
So I'm going to break down supply chain finance a little bit more for those of us that don't know.
Okay.
Define that one for me. I'm the one that needs the cue here, not the audience.
So I'll give you an example. Think about you're selling stuff to Home Depot.
Oh, I'd love to.
Right? Let's say you sell hammers. They're going to pay you 100 days.
Oof.
So yes. So you need that cash quickly. A lot of people go into factoring, they go into their line of credit, if they're lucky, or they do an asset-based loan. But a lot of companies do not have, the ones that really need the cash, do not have access other than factoring or credit card, which are very expensive.
Sure.
So what we're doing is basically providing vendors visibility into the status of their invoices, the status of POs, pretty much everything that comes out of their ERP system, right? And also they get to see when that invoice is approved. As soon as that invoice is approved, they get access to that cash.
Nice. Now, what if they don't have an ERP system? They're like me and they have QuickBooks.
Doesn't matter. An accounting system. Yeah.
Excellent.
It can be an Excel spreadsheet. It can be SAP.
But the reality is your product and your technology allows you to enhance the experience that your customer is going to have by, reducing that time frame for being able to pull the money into the organization to make their money and their cash flow operate for them.
Right. In order for that to work, you need 2 things. Access to cash, so you can pay early, or a third-party lender. That's one part. The other one is how do you approve invoices quickly, which is the main issue with pretty much 90% of the companies that we talk to, right? And I'm not at liberty to discuss. We just signed a pretty large deal within government here, and it's exactly what they're looking for.
The government here.
Not saying anything else.
Okay. Thank you.
Thank you.
Keitha, please.
I'm Keitha Maciel. I'm Senior Director of Marketing Operations at WorldPay. We are a payments processing company located here in Atlanta. And so we also provide other merchant processing services as far as working capital and things like that.
Very nice. Dara.
Hey everybody, I'm Dara.
Sorry about that.
It's fine. Dara like Sarah, it's easy Q. I'm co-founder of a company called Equitable Payments. It's founded in 2009 with my twin brother, which we could have a whole conversation about working with someone you shared a womb with. We started the company coming from different backgrounds, really wanting to get into a space that's often really mired with shady business and people who do things dishonestly with it, but that's their intention. We wanted to do something that was more honest and reliable and transparent, so we founded our company as a brokerage. So as it so happens, WorldPay is one of our partners, as well as some of the other major payment processors, so we can shop the marketplace much like an independent insurance broker would do for credit card processing payments and the full gamut of merchant services.
Thank you.
Hi, my name is Kevin Gallagher. I'm the Senior Vice President of a company called 2Checkout. We are a global payments processor. We focus on small to medium-sized merchants that are based in over 196 countries. Essentially what we do is provide them the ability to start selling their goods and services online, give them access to be able to accept all the different forms of payment, whether it's Visa, MasterCard, traditional payments, all the way down to payments that are maybe popular in a local region. and then also allow them to sell in a localized buying experience. So for example, if you're in the United States and you're selling to somebody in Mexico, we're able to set that merchant up so that when that customer comes to their website, it converts it into Spanish at the checkout. It will show the dollar amount converted into peso so that the consumer sees exactly their experience from their local localization perspective. So we've been around for about 15 years, but we're kind of like a startup. We're kind of these, if you're familiar with a PayPal or like a Stripe, very similar to that company.
I like how you described yourself when we were on the phone, and you said that you were a 15-year-old startup, and I was really invigorated by the idea of retrenching and going back in the market and bringing your services to light. And I think one of the questions we had discussed was simply what makes you different from the PayPal and the Stripe of the world. What sets you guys apart? And if you could share that, that would be great.
Yeah, I mean, I think international is just booming right now from an e-commerce perspective. It's you hear mobile a lot, and that's very hot, but e-commerce is just growing tremendously. And then when you look at some of the international markets, Asia, Pacific area, or areas in Latin America, look at China, look at India. I mean, this is the first year that China will actually do more e-commerce transactions than the United States. So it's very exciting to be with a company that can really go into these markets. Not many can. I mean, you hear Stripe's name a lot, but they're really only in like US, Canada, and Europe, or Braintree or some of these other companies. PayPal is definitely our big competitor. They are also very global in nature. But yeah, we're in the hottest market right now, and really taking advantage as these markets are really coming online and starting to sell more online, and businesses are coming online, taking advantage of that opportunity to get in there early, be able to sign up as many of those merchants as possible. There's minor differences between us and like a Stripe and a PayPal. All of us charge basically about the same cost to the merchant. We pride ourselves on customer service, so we provide 24/7, 365 customer service, versus somebody like a Stripe that doesn't even publish a phone number. Believe it or not, they don't even have a phone number. So there's minor differences there. But yeah, again, the localization is very important. Not just, you're in China and you're selling everything, in Chinese language, Chinese currency. You're now able to sell globally and adapt, your checkout to those local customers all over the world.
Kevin, has your market always been international, or was that something that was new as the company evolved over time? When did you guys enter into the international marketplace?
I think it just gradually happened over time. The initial focus, 15 years ago, was really when e-commerce was just starting off in the United States, and everybody's like, oh, we got to get online, we got to sell online, and there's this like mad scramble. And the bigger merchants obviously had the staff to be able to do it, and tech people on their teams. But the small merchants just had no idea how to get online. It was just very daunting. Trying to figure out how to set up a website, how to put in, the ability to accept payments, how to set up a merchant account, process transactions securely, and so that's how 2Checkout was really founded, to make it very easy for these US-based merchants to come online and start selling very quickly. But yeah, as e-commerce started growing internationally, we gradually started expanding our footprint, and now that's a majority of our market. About 80% of our company's business is outside the United States.
And the average company size, what would that range? Are they still the individuals that struggled with getting online and figuring out e-commerce, or has the size and the aptitude of the client expanded as well, and it's just more of let's outsource it and go to you guys because you provide an all-in-one service that will encompass doing the e-commerce for them? Yeah,
it's predominantly small to medium-sized merchants. I mean, every payments company out there, from WorldPay, to all the big acquirers, to a Stripe and PayPal, they, some of them kind of position themselves towards certain markets. Some try to, service every size merchant possible. I love the small to medium-sized space just because, they don't transact a lot, but, there's always lots of them, right? There's tons of small businesses opening up every day. They really are attuned to the services we provide, which is making it super quick and easy to get online. I mean, we're doing instant onboarding and underwriting of an account regardless of where you're located in the world, and then we're fully integrated with most of the major e-commerce platforms out there. So it just makes it so easy for them, even if you're just a sole business owner, to be able to get in, get online, and get set up and running, and accepting payments that same day.
Thank you. Dara, you had alluded to the fact that maybe in your history of your prior work experience prior to starting the organization with your brother, that maybe it was, didn't have the the most stellar individuals within the workspace, and that was maybe the driver that gave you the impetus to create the organization. Can you allude a little bit more on that? Because I'm very curious as to how you guys eked out your niche in this space that seems really competitive.
Absolutely. I think that ultimately, whenever you start a business, you need to do something that resonates with you, and for me, being completely transparent and honest is important. So when it was my brother who brought the idea to me, I came out of the fashion industry as a wholesaler and was working with a lot of retailers who continued to tell me the same horror stories over and over about being taken advantage of by their merchant services person. Someone would come in and sell them a bill of goods, and on the flip side, they'd find out they were paying nothing what they were promised. They were locked into contracts they didn't know about, or stuck in leases or other equipment deals that were not what they had anticipated. And much to your point, I always really appreciate working with small businesses, because what you do, the impact is something that really matters to them, and it impacts their bottom line almost instantly. So I love the idea of finding ourselves, even in an extremely competitive marketplace, doing something that really mattered to the business and really impacted their bottom line. So while yes, we both partner with and compete with the giant behemoths like WorldPay, we can still find that niche because people really value being, like, our business is completely driven by referrals. So when someone's referring us in and they say, this is someone that you can actually count on, they've been around, we know that, we work with them, and this is the results you're going to get, that's been really meaningful both to us and to our merchants.
So from where you guys are being a startup, how would you describe the biggest opportunities in your space that you're seeing on the horizon, with organizations like WorldPay that are complementary and partnered with you? Where do you see the organization going from an opportunity perspective?
So I think both the opportunity and the challenge exist in transparency. I mean, it continues to be that way, that personally and as our company, it's really important for me to have exceptional service, and that's something that is not tangible, and it's something that isn't such a differentiator on paper, as our marketing expert might say, because everyone's going to boast that they're great at service. But I think that really is a huge differentiator in this field, who really has that follow through and who really delivers what it is they say they're going to do. So even not from a technology standpoint, I think we've gotten really good at catching up with trends in technology and making sure things like Apple Pay and other remote transactions are capable and they're possible, and they're things that everyone can perform on. I think it's really that people-to-people part that our industry is still faltering on.
Are you able to weed through for your clients and provide them with multiple options that they can select from, or is it typically, once you understand what the need is, that it typically fits into one or two buckets based off of the options that you may have to be able to provide them?
Yeah, I mean, so again, if we're comparing us much like an independent insurance broker, because that's a model everyone's familiar with, we're going to do the same thing. So we'll have a short consultation with the merchant and really understand very quickly, given where they are in the course of their business being new, or how established, the types of volumes they're running, the industry they're in, and what level of risk we'd assess that an underwriter would see when they'd go to approve their account. That gives us then a quick understanding of where we can place them in the market, where they're going to get approved, and then past just the rates and approval, where they're going to get a really good service experience that's then done in tandem with us and our company. So it's a pretty quick consultation, actually, and ultimately in this industry there's, in my opinion, only a small handful of people that I think are really reliable and are going to do the job well and fairly.
Very nice. Keitha, I was at WorldPay about a year ago meeting with some staff there, and I am always so intrigued at some of the products that you guys are developing that the majority of the population does not know about. And I would imagine that you being in the marketing arm of the organization get to see a lot of things before they make it to light. So I would like to just curiously ask, what are you seeing within WorldPay that you could share with us that's going to be on the horizon, something that's technologically unique or different, or is a differentiator for your organization?
Well, I think that tablet POS, point of sale systems, are going to gain steam because as most of the small and medium-sized businesses, they don't have the funds to purchase large point of sale systems. So the new tablet point of sale systems allows them to have a full-fledged point of sale system that has inventory management, in addition to accepting payments, has some payroll capabilities and a variety of tools that gives them, it's kind of a small package for, gives them a lot of capabilities in a small package.
Very nice. Give me one more. Come on, one more. I just love knowing what's going on.
And I would say, one of the big opportunities is, driving more of the omni-channel commerce. Mobile readers have become very popular. Everyone is coming out with a mobile reader. Even Groupon has a mobile reader now. And so with the mobile readers, one of the big disruptors in the industry right now is EMV, which is, accepting chip card payments for credit cards. And so that's a security measure that will help improve customer confidence, but really developing tools that will help secure the transaction, because that is on the minds of a lot of consumers today, as well as developing those payment technologies for different industries such as restaurant and common verticals would be retail, but and merging out into different markets.
It appears that chip and PIN was just a little bit of a struggle to execute here in the States. And even still, the whole premise of giving someone your card, you're putting the PIN, but I still notice that there are many times where the retailer isn't quite ready and they have to take the card back to the register, only to come back and kind of have this sense of frustration of, oh, it's not accepted, or I need you to turn the card a different way, or insert it in the bottom, wait, don't move, don't pull it out yet. It's very fascinating. Are you guys experiencing a lot of challenges with organizations that are being forced to require the chip and PIN, moving down that model? How's the support mechanism for WorldPay supporting it and evolving to help support them?
Well, it's a gradual migration for the United States as a whole. In Europe and other countries, they already have chip and PIN. And so this is something that's new for the U.S., and all of the different payment processors are getting ready and trying to build up their certifications and payment technologies in order to support this new card that many retailers are starting to issue now. And so it's going to change the way people do business, but it is a business decision for the merchant as to whether they want to accept it, whether they don't want to accept, chip and PIN card. But ultimately, it's a security measure that will be mainstream over the next few years.
Nice. Santiago, in reading your bio, this isn't your first rodeo, coming from a history of being with Equifax and others. I was very intrigued at just simply how our previous lives develop where we land. And it was very ironic that you're in the business that you're in now. And since you won't talk about your government deal with us, or
not yet.
Okay. Just making sure. Maybe you can talk to us about some of the other buyers, or the buyers and suppliers that you do connect, and give me a real-world example of what that might look like.
Sure. So, Equifax was pretty good. Working here in Atlanta, London, Spain, gave me a pretty good background in terms of the commercial finance. And fortunately or unfortunately, everybody in my family is in accounts receivable financing.
Oh, it's always fortunately.
It depends who you talk to. We started this company. I was actually in Spain, and I was thinking, I need to do something, and talked to my cousin, and let's do something. And long story short, we came up with a reverse factoring model. For those of you that can I show by show of hands who knows what factoring is?
Who wants to know what factoring is?
Yeah, who wants to know what factoring is? You have an invoice, right? And again, my example is Home Depot owes you money, and they're going to pay you at 110 days because they want to, and they can. So what do? You need cash. You need to pay employees. You need to pay the lights. You need cash. So what you do, and if you don't have a line of credit or room within your credit card, you have to sell that receivable at a discount. So you go to a factor, right? And typically banks don't factor transactions lower than, in the 100,000s. They do millions and above. So most of the, small and mid-sized companies are doing, thousands of, $50,000, $100,000, $500,000, and they're, they have to go through an underwriting process. They don't get the full amount of their money. Sometimes they have to put a personal guarantee, and you're paying significant rates. You can pay 2.5%, 3% on a 30-day basis. So it's pretty rich, but you're getting the cash because you need it. So we came up with a reverse factoring model precisely to reduce the risk in factoring, because the factor is taking a risk. The factor doesn't know if that invoice that you're selling to them is real, right? So that's one of the biggest issues. The other one is offsets, right? You owe the buyer $50,000 for a previous shipment that didn't come through correctly, or something happened with it. Well, they're going to take it out of your next payment. So that's the other concern. That's why factoring rates are so high. right? So we take that, basically we eliminate that. What we're allowing to do is the vendors can just have access to their cash, they get paid the full amount, and they benefit from their buyer's credit, credit rating, their credit risk.
But now what if there's an RMA or a dispute on a product, or the invoice maybe is, what if there is an invoice issue?
Good question. So every invoice that you're allowed to discount has to be approved for payment first.
So it's presented to them for approval for payment first, which kind of takes the liability off the table in some regards.
That's correct. That reduces 95% of the risk.
Very nice.
So, and what you really do, you got to look at, you got to help the company approve those invoices quickly. Because people talk about, okay, how much does it cost me to really approve an invoice? They don't take into consideration, I am leaving money on the table because my vendors are probably willing to offer early payment discounts and I'm not taking them. Because it's taking me a long time, or I don't have the cash. So we solve those problems, right? We help approve those invoices quickly. We had a company that was taking about 21 days to approve. We moved them to 3 days.
Wow.
And again,
in some instances, that can be a lifesaver for an organization to be able to keep their doors open and keep money flowing if they do the next transaction.
That's exactly right. A lot of people do. I've heard a lot of people talk about, I do deals with the government, and they say they pay in at 30, but that's never the case. Right, and they're struggling. They're desperate for that cash. So, if you look at the government here, for example, and I'm not going to mention, I'm not going to fall into that one.
No.
They're AAA rated, right? They're really good credit strength. They get rates really, really, really low. We get funding sources that can fund a transaction on a 2% plus LIBOR on an annual basis. So, why can't you extend that to your vendors?
Yeah.
So that's what we're really trying to do. We're trying to help the buyer by allowing them to, reduce the cost of their, of their infrastructure in terms of approval, in terms of management, and gain access to those early payment discounts, while allowing the vendors to dynamically ask for their cash whenever they need it without going through underwriting, personal guarantees, or paying, very high fees.
So we're going to reverse it. Kevin, I'm going to go back to you, and we're going to talk about negatives. I always want to end on a positive, so I'm going to go ahead and get the negative out of the way. Negative disruption in the space, something that can impact, if not corrected or modified or remedied, your industry, specific to you.
There's a lot of negative entrants that come into the space.
What's a negative entrant? Somebody from a characteristic perspective of an organization or a product, or?
Well, I think, a threat in the industry is always kind of the new breed of company that comes in and disrupts the existing incumbents, and I think that's what we're seeing.
I might be one of those.
We're seeing that right now, definitely. And, some of the companies I mentioned earlier, like Stripe and Square and Apple and others that, were not in payments, 4 or 5 years ago. If you look at payments, going back 5, 10, 15 years, is mostly banks, financial institutions that own the big credit card processing companies. And not to bash any banks or anything like that, but just not quite as quick moving. You get very large, right? The larger the organization, sometimes they slow down a little bit. And so these technology companies pop up and are like, man, this payments thing is just a mess. Why hasn't anybody fixed this? And they're just thinking totally different, than a lot of payments companies traditionally have done. So they come in there and they come in technology focused, because technology is really driving our industry right now. And yeah, they've just been very successful, those companies I mentioned. So they're a disruptor to traditional processors that have been out there, to the banks, the merchant acquirers, because now they're becoming kind of the front end interface to signing up all the merchants. Right, so all these tens of thousands or millions of small businesses that would normally go to a bank or financial institution or a processor to sign up for a merchant account are now just signing up with PayPal or signing up with Stripe or with Square, and they're never seeing the traditional processor. So those are disruptors, and as those companies get bigger and they're gaining a lot of momentum now, they'll become even more disruptive to the ecosystem, and it forces everybody else to just really move quickly as well. It kind of puts the pressure on everybody else to stay relevant.
Are they following the rules from a compliance? Are the disruptors in your space, are they following the rules? Are they following the regulatory oversight and the compliance and the things that are necessary in your industry? Or are they just simply getting gritty and saying, I've got a product, let me put it out there for the world?
Yeah, I think for the most part they are. I mean, there's been examples like, when Square and PayPal and others first popped up where I would say they were pushing the boundaries, and everybody that was traditional in the industry was like, wait, that's not fair. How can they do that? We're not able to do that, and but then over time, as they became larger and people saw, hey, this is actually working pretty well. Next thing you know, Visa invests in them, or some MasterCard invests in them, and and then it just starts to become more widespread. So like I was talking earlier about like instant boarding of merchants. Traditionally in the past, if you wanted to get, the ability to accept credit cards, you'd have to, go to your financial institution or acquire, you'd have to fill out this big nasty stack of paperwork, you'd have to, financials and driver's license and blood tests and hair follicles and just all kinds of stuff. And then like 3 weeks later, you get a merchant account. Now, go online, enter like 8 fields of data, you're approved. Right, and then start selling, and then the credit monitoring is happening a little bit more on the back end. So guys like PayPal and Stripe and others, we do that as well, have kind of pushed the boundaries, in that area. I could talk for an hour on like Apple being a disruptor. I don't know if you want me to talk to that extent.
We will do a round of popcorn about disruptors here shortly.
Okay, I'm going to save Apple then for that.
Keitha, negative disruptors to your space, ones that are pushing the envelope.
I would say very similar. But also, I would say the new entrants for mobile apps, because mobile payments is becoming very popular. And so, for example, you have a PayPal that does person-to-person payments, but then there's other disruptors like a company called Pay Near Me, which is from Israel, that offers a similar service to capture a different segment of the market, which are what they call the unbanked, or people that pay cash that don't have bank accounts. That can become those are companies that you want to watch because they can capture market share very quickly, as PayPal did, and they start to change their services. So when PayPal initially entered into the space, they typically just offered certain types of payments, but then they expanded their service offerings, and so that becomes a bigger disruptor, because then you have to kind of watch for them to see whether they're going to gain increasing market share, as well as the newer entrants as far as the mobile space is concerned. So mobile payments, I would say, with companies like Pay Near Me and things like that, would be companies to watch that could be negative disruptors.
Very nice. I'm more familiar, obviously, with WorldPay and you guys being longevity industries. Dara, for you and Santiago, it seems like you guys are the disruptors in a way. It seems like you guys are creating businesses that perhaps there was not this market for prior. How are you seeing the adoption of what you're doing into the space that you're in? Are you seeing other people kind of trying to lead on your tails, or are you guys really the front runner that's setting the pace for everyone else?
See, I wouldn't call I wish we were a giant disruptor. I wouldn't necessarily say that we are entirely. I think all we did is we took a really tried and true model in another financial services arena and put it into this one, because we felt like the disruption we wanted to make was around service and just transparency, like I've really hammered home in my responses.
I don't know. I would beg to differ, simply because if I go to a website to sign up for merchant processing, I'm not going to see somebody saying transparency and trust and honesty. I'm going to see them saying 2%, 1%, 0.5%, sign quickly, do it today.
Right.
And what you're offering is so unique, and the value proposition of what a client can get from it is an emotional buy-in as well as a social buy that really says, I'm putting my money with what I feel is right. So I think it's a disruptor in that regard.
I appreciate that. I'll take it.
I think it's amazing what you're doing, and I think keep doing it. And I see you as a front runner, and I don't see many behind you, but keep at it.
Thank you.
Santiago, the same for you.
Thanks. I like to think that we're disrupting, because we're going into a space where traditionally banks have done this very inefficiently and only targeting the big suppliers, for example, for Coca-Cola, you have suppliers that are doing 50, 60, $100 million in sales to these specific clients. These are large companies. They have access to cash. Small companies are out of luck.
Yeah.
They're the ones that nobody's focusing on. So we kind of said, okay, we need to fix this. And because we're going to small and mid-sized market, right, we're finding out that a lot of these companies are very unsophisticated. We started this in South America. We grew it to 400,000 suppliers in our platform. And we have companies like GlaxoSmithKline, Pfizer, Johnson & Johnson down in South America with us. So they're interested into this, right? And they also want to diminish the counterparty risk. What does that mean? I need to make sure that my vendors, right, have liquidity to continue to supply, right? And that's important, right? Competitive advantage for companies nowadays is, who do they buy from, right? Coca-Cola, for example, they wouldn't share that with anyone, right? This is like top secret. So we're trying to help, and banks, they're only interested on the top because of the structure and the legalities and all of the restrictions of banks now they have nowadays. So there's a huge opportunity for the small and mid-sized lending. How are you going to do it? I mean, you're starting to see a ton of players.
Yeah.
But what we're doing different, and what I think is disruptful is, I don't know if that's a word, but we're really trying to get into, not just bring capital and ask you, hey, do you want a loan? Or do you want to discount invoices now? We're bringing a system, right? Getting to the day-to-day operations of a company, and then all of a sudden apply liquidity. Inject liquidity through that channel. So it's basically liquidity on demand. That's what we're trying to do.
Very nice. We're going to do a round of popcorn, which is going to involve you guys out there. I need at least 5, but one of the questions, and I really had a good offline topic with Kevin on disruptors in the marketplace and what we see as consumers. So I would really and truly, just round of popcorn, throw it out for me. Who do you think is a disruptor in the payment space? I'd like to hear the names. If you can think of them, if you can throw them out, that'd be fantastic. Absolutely.
Square?
Yep.
Venmo? Yes.
Interesting. Very interesting.
Who is it? Venmo?
Venmo.
What about Everbank? Like the almost all online banks?
Moving away from the retail model, and yeah, absolutely. Those are good ones. I actually hadn't thought of those. We had a good discussion on who some of the disruptors were just to the payments industry in general. And so here, I'm going to do popcorn for you guys. So we're going to do one quick round, and then we'll come back and talk about it. So, disruptor, just a name.
You know what, on the payment space, in the B2B world, there needs to be disruption because it's terrible right now. So I'm negative on the whole thing.
Keep that.
I think it's some of the ones that we've already said. I would definitely say, Square, PayPal, some of the Stripes, some of the common ones that most people are familiar with. Apple.
Absolutely.
I would agree. I'd also add QuickBooks. They have a payment component.
Interesting. Very interesting.
I would say right now in the e-commerce space it's Stripe, and I'd say down the road it's Apple.
Apple has so much media coming out, and I've behind the scenes watched a little bit of the negotiations that they put their vendors through, and it's impressive. Release of liability, and we are going to take this payment rail and we're going to run it. And it's been a very fascinating model to watch. From your perspective, how do you think they're going to change the market? What do you think is going to be next? What are we going to see as consumers?
Well, I mean, no doubt it got tons of buzz, even pre-launch of Apple Pay about a year ago. So much, it was just crazy. But, in reality, it's very, very difficult to make changes at the point of sale. I mean, if you think about, the past 10 or 15 years, the only major change at the point of sale has been like PIN debit. Other than that, there's been hundreds, if not thousands, of alternative payment methods and devices, and let me use my fingerprint, and they've all failed. And the reason is there just wasn't a strong value prop for the business to accept it and for the consumer to use it. Okay, so now you have Apple come out, with Apple Pay, and the one thing they did that they were very smart about was that they're riding the existing payment network rails. Okay, so they ride the Visa, MasterCard, and American Express rails, which means that really merchants don't have to make any major changes to their point of sale software system or how they route transactions or how they're getting funding or anything like that. All they've got to make sure they do is put a reader, an NFC reader, to be able to grab that transaction. So that was super smart because if they had went out there and made merchants put in different connections and hey, route it to Apple and I'm going to fund you and I'm going to provide customer service, that would have never worked. It would have failed. Now, it's going to take a long time. I think the stats I looked at, the 1-year anniversary came up last week, and only 15% of the people that are able to use Apple Pay actually have ever used it. So, and if you have an iPhone 6. So that's pretty staggering. Only 15% have ever even used it once. And when they ask people why, it's I didn't even know it was on there. I didn't set it up. I don't know how it works. And then the biggest reason is that it's just not any different. I might as well just give them my credit card like I do today, right? So there's not really a strong value proposition for the consumer. But just like Apple, I'll give you a good analogy. Look at what they did to the telcos. right? The telcos right now are like, I hope there's no telcos in the room. But they're a pipe. That's all the telco is right now. I mean, Apple controls everything. And maybe 5 years from now, they actually are the telco as well, right? That's what they're gonna do in payments. I guarantee it. It's going to take them a while, but once they start gaining more traction, they're getting more adoption, they're getting more usage, then all of a sudden they have more power, more leverage, and they're going to start putting pressure on Visa, MasterCard, and the associations and the banks and retailers, and then they get more proper. I mean, so it's
the reach is pretty far. I mean, even down to the security perspective, because you think about, okay, you've lost your phone, maybe you didn't have the password on it, maybe you didn't do the fingerprint, whatever. But it's also developing a lot of technology products that are coming out to help find ways to secure your mobile devices even further, which I find just truly intriguing.
Yeah,
so
absolutely.
So Derry, you had mentioned QuickBooks and the Intuit. I'm very intrigued by hearing this. Tell me more.
Yeah, I mean, certainly everything else that's been mentioned, I would agree, is a disruptive force in the marketplace. But for me, QuickBooks I see a lot because you even mentioned it earlier, it's something that your business uses. It's so widely used by so many small and mid-sized businesses, which is the predominant market for all of us. And so it was really smart of them, frankly, to create GoPayment and Intuit for the online payment version. And I see more and more where they create these really prohibitive environments for a merchant to move away from their payment component because they have made it so seamless, albeit expensive. So
yes, I was just going to say, I'd like you to go negotiate with them for me because I would like them to bring their rate structure. But they do offer an all-in-one package.
It's smart. I mean, they're monopolizing a market, so they're allowed to charge more, and I completely understand that. And it's simple, and simplicity can charge more. So same as PayPal and Stripe can charge more because it's simple and easy to understand. And people sometimes value that more than either understanding the bottom line or just wanting to pay more to make it more simple in the front end. That's much like what QuickBooks and their two different platforms for payments have done. So whether it's QuickBooks Point of Sale, which is proprietary and you can only use it, or their invoicing, where you can find plugins through softwares that will be the middleware and allow you to use a third party, much like one of us, for the payment space. It's all clunkier, so they understand seamless means customers and more margins.
Thank you. Keitha?
I would say,
You had mentioned Stripe, and I think it was the one that maybe sticks out for you, but if there's another.
Oh, well, I was going to kind of piggyback off of Apple a little bit because now they're, with the wearable technologies. And so even though they're not direct payment devices in themselves, but they have a data connection, which enables them to make payments. And so that is something that, you also have to watch for. But then there's the security, play with that, being hacked by, a watch or the Google Glass or things like that. But those are things that, you kind of have to kind of look at, but yet keep an eye on because it's kind of the big buzz, having, wearable technology that you can do that has so many capabilities, not just payments, but then also, for your health, the tracking, and so on and so forth. And people like that because it's all in one, it's on their person. And so those are things that you have to also kind of, look at as far as from a disruption standpoint that could gain steam in the future.
Are you seeing a lot of movement around I'm not really quite sure what they're termed as, but the single cards that hold, it's a physical device as opposed to the mobile device, but a physical card that holds all the card data and information on it. Do you have any opinions on that, or have you seen a lot of it?
I haven't seen a lot of it, but I have heard of a number of people trying it, and the ones that are early adopters, they love it because it's like, oh, okay, with this one card, I can just choose whichever, payment or bank that I want to use to charge it to. So, that's something in addition to watch. I mean, there's a lot of different technologies that are coming out that, people are trying to gain their spot in the world, so to speak. And so those are things that we constantly monitor to see whether they're going to gain steam as well as, become a disruption in the near future.
Santiago, that government account, how's that doing for you? Well, you didn't give me a popcorn round, so I've got to ask you in another way.
No, but let me go back to that. I feel like over from here to that side, you guys are talking more on the credit card space and methods of payments, more in the consumer space. I'm really not into that area because I'm more B2B. I'm dealing with companies writing checks.
Absolutely.
And that to me is kind of like, okay, that's my competition. And somebody here, I think it was you, mentioned Bitcoin. That intrigues me.
Me too.
Because that is, now it's basically changing the paradigm. It's a paradigm shift from everything that we've been doing for all, It's either wire, ACH, P cards, and checks.
Ripple, anybody heard of Ripple? Anybody playing with Ripple? No? Yes, maybe? Okay. Yes, Bitcoin is very intriguing. I put my toe in the water 2012. And it's a fascinating world. The intriguing part is that they are no longer talking about the currency so much as they are the protocol. And the protocol is really what's going to take on the movement for allowing money to get from point A to point B so much quicker than the ACH mechanisms or the e-checks or any other form. You know, since 9/11, when they grounded the planes, couldn't get the checks from one side of the country to the other, and said, okay, we've got Check 21 and all these other options that are available, they still didn't really solve the inherent problem of us going paperless and finding a solution. The European Union was very, very fortunate in that when they founded, they said, hey, we're forcing everybody down this model of SWIFT. Like it or not, you're going to do SWIFT. So if you go to Europe and you're in London, or if you're sending money to France, you just HSBC, pop up your thing, dip, you're done. And I couldn't agree more, but obviously I am not on the panel, I'm just moderating it, so I'll move off the topic of me. This has actually been really amazing. I've enjoyed speaking with you guys, and I know that we're coming up on that 40-minute mark. So I'd really like to open it up to the audience and questions that you guys may have of our panelists. I mean, we've got an amazing amount of knowledge up here that we probably aren't quite even scratching the surface of, and I would really encourage you guys to ask away. Let's get engaged and ask questions of the panelists up here.
I actually have a question. So something that I've been seeing across this entire industry has been this constant reminder of this upcoming generation. I would love to hear just your thoughts on millennials. How are you guys evolving?
I wondered if you were going to say the M word. Would you like to direct that to anyone, or?
I would love to actually hear from Keitha and anyone else who'd like to chime in.
So we definitely take millennials into consideration because we know that they are very up on digital currencies. They're not the traditional generation that stores money in banks. So we focus on technologies and providing services that make it easy for them. One of our taglines is trying to allow merchants to accept payments any way they want to pay, because gone are the days where like I have my nephew, he says, oh, can you buy me this? And if I say, oh, no, I don't have any money, he's like, well, in the old days, my other niece said, oh, write a check. She knew what that meant. Now it's like, well, can't you just transfer it through PayPal? And it's like, how do you know that? So, it's all of the digital currencies that are starting to take shape. And so we have to take that into consideration because they're going to be the future business owners. We, like the other panelists, we target businesses, small, medium-sized, and also national franchises. But we have to take that into consideration because they're the up-and-coming consumers that we will be targeting in the future.
Bring up an important point out of my colleague that Amazon has allowance. I don't know if you knew this. There's an Amazon allowance service. And so I think that when I think about that, I have kids and I think about millennials as well that are probably trying to save. I mean, it's a whole new generation that are thinking about money in a totally different way. I mean, is the savings aspect also coming in? We're talking a lot about spending here. So I guess if any of you thinking about what's the disruption or changes in spending?
I mean, I'd like to speak to that just because outside of this, I write children's books that teach financial education to elementary age children. So for me, that's certainly really important. Like, I think it's all about responsibility at the bottom line. And certainly this is one half of the equation, but having the financial knowledge in the first place to responsibly use credit cards is really important as well. I can't say that that's a giant part of our marketing and our practice, but personally, that's a lot of why I do that work on the side, because I think that balance is really critical. I appreciate your actually commenting on that.
I'm just intrigued because I have a 6-year-old and a 3-year-old, and I found an application about a week ago that allows me to list the chores that I want them to do. So I make their bed, and it assigns a dollar value for the amount of the allowance that they'll receive for doing that chore. Now, we haven't actually gotten to the payout part yet. I'm hoping that they...
Isn't that child labor?
Yes, exactly. We have not gotten to the payout part.
You gonna pay them in Bitcoin?
I know.
Yes, imaginary money that I have to convince them to put in their extra long code to be able to go and redeem, which they will not remember, I'm sure. But I'm really intrigued by the applications that are coming out. To your point, absolutely. We have been talking a lot about the spending side. The savings side, I think, is there. And I think that the generation after the millennials is really going to be impactful because we're starting to see the ramifications of what's transpired between, the baby boomers and the X Gen and then the millennials. And now we're going down one more generation, seeing the impact that we can make to adjust for, any of those inefficiencies in the generations as they're making their spend. So very, very cool. Thank you. Others? No? Wow, you guys are a quiet crowd. Yes, thank you.
Is Apple Pay the same thing as Google Wallet? I don't know what Apple is.
Google, it's fairly similar. Google has morphed their model about 15 times in the past 10 years. It's now called Android Pay, is essentially what Google's competitive product is to Apple Pay. So the wallet Google Checkout morphed into Google Wallet, which morphed into like Google Mobile, which morphed into like Android Pay and and all that. So that is a competitor. So and then Samsung Pay just launched yesterday. As well. So now, retailers are getting bombarded with like all these, different phone carriers, different providers, and offering the different mobile payment solutions, which is a bit daunting because not all of them work exactly the same from a technology perspective. Like Samsung Pay is slightly different than Apple Pay. So, as a retailer, trying to figure out what, do I accept it or not? And then if I do accept it, what do I accept? And then am I putting in technology that's going to last me, 5 or 10 years. That's the frustration a lot of retailers are having now. And then the whole EMV comes along, okay? And then you're like, okay, wait a second, how does EMV impact, a mobile transaction? And so that was a long-winded answer to your question, but Android Pay is now kind of Google's version of Apple Pay.
So I recently joined a startup around here that's focused on healthcare payments, and it's really interesting to me in the States because I was at MasterCard and did payments there, everything's like quick, fast, like let's do it. And then you go to something like healthcare, and unless it's government mandated, and if it takes like under 3 months to implement, like they don't want it, like it's everything's slow. So like how do you take that into account when you're thinking about the future of payments, and you have all these companies that want to go in there and create these super fast, amazing experiences and technology, but you have an industry like healthcare that is just so unreceptive to it. How do you work around that and kind of change that mindset, or do you have to kind of play by the rules? I can go to anyone.
Well, we could step them in with Santiago's products.
Yeah, I was gonna ask, is this for insurance to healthcare?
No, it's patient payment, sorry.
Patient, okay, so I'm not the right person for that.
Well, we serve the healthcare industry as far as payments are concerned, and more, believe it or not, doctors and other medical professionals are realizing the importance of payments and making it easier for their patients. And so, being able to, I think it's more about education and really educating them on the value of payments and making it easier for their customers, and also giving them options in the ways that they can pay. So being able to make their payments online, they don't have to physically come in or mail in a check, or there's various options that are available in the payment space for healthcare. And so more and more of them are adopting a payment technology and a payment mentality. And so we're seeing growth in our company in the healthcare space. It is a close-knit community, and so kind of breaking into the healthcare space is kind of difficult because they're very word of mouth and referral based. But once you get that referral, or you make good on your promise, your brand promise, then it becomes a lot easier, because then doctors speak in different associations, and they'll say, oh well, who do you use? And they'll recommend the company that they use, and then you get the phone call, hey, you're doing something for my doctor so and so, or you see the medical practices that have different entities within the same building. So they're it's not, you might have family practice, you might have a wound care, you might have an orthopedist, different specialists all within one facility. And so, they all talk. And so, being able, yes, you have to be, they're very regulated, and yes, you have to abide by the regulations in addition to the financial regulations. But once you break into them, they're very receptive because they really realize that they need it and that the industry's changing.
Any other questions? I'd like to do just a quick share before we wrap up. I don't know how many of you are aware, but Atlanta is a huge, huge, huge financial sector. Most people think New York, they think other cities, but more payments traverse through our city than any other place across the U.S. We have, we're very fortunate in Atlanta to have organizations that are headquartered here that do processing of payments and to be able to touch them through the pipeline of Atlanta. Georgia Tech did a study about a year ago, and one of the unfortunate items was that our city doesn't support our own city. Because we are a lot of transplants, if you look at San Francisco and the incubators they have out there, and you look at Google and somebody leaves Google and they go start another company, or they go to PayPal and they start another organization, and this multiplier effect of working among one another and keeping that knowledge base local. So today we are very fortunate to have Georgia brands up here on the panel, people who represent Georgia. If you see these names, if you recognize them, support them. I think it's important that as Atlantans, regardless of whether or not you're a transplant, that we acknowledge the fact that we have really amazing organizations here in our own city, and we should tap into them as much as possible. So hopefully if you have a resume that comes across your desk, or if you have an opportunity to do business with someone, if it says Georgia-based or Georgia organization, please think of them first. So thank you guys so much for attending this panel today. Kevin, Dara, Keitha, and Santiago, thank you. Thank you so much for participating, and if you guys would give them a round of applause, that would be fantastic.